Hello, Maverick Traders. This is Rob Reinhold, and it is October 10th, and we got some carry through from the weakness of last week. So there was really no surprise. We expected it to be another risk-off week in the markets, and that's exactly what we saw. And so if we take a look at the actual numbers here, we see that the weakness continued. There was really no bounce at all today. Asian markets were weak, European markets were weak, US markets were weak. And so we saw weakness across the board. I mean, pretty much in every asset class, except for two. We'll talk about those in a second. But we saw the S&P down 0.75%, the VT index down about 1%, crypto down 1.5%, gold down 1.5%, oil down 2.6%. Okay, so again, down across the board, except for two things. And again, these two things are typically inverse of equities. And sure enough, we saw the dollar and bond yields go higher. So the dollar, we talked about how the strong dollar was likely to go up and make a run at the old high and probably break through and go to new highs. We're starting to see that develop. We talked about bond yields likely going higher as well. And you can see here, the bonds moved up a little bit. And the big news here is we heard from Fed Governor Brainerd, and she came out and she said that, hey, we're going to keep raising rates and it's likely going to lead to a recession. Definitely not what the equity markets want to hear. So ultimately, we got ourselves a sell-off. And when we take a look at the charts, we can see that we actually approached those lows that we set last week, somewhere down there around the 35.95 area. We did find a little bit of support there and had a little bit of a bounce. So we did close off our lows, which is somewhat encouraging. Encouraging in the way that you get some really bad news and then you happen to find $1 on the street. That's not really all that good of news. Our call in the currency room over the weekend was that we were going to come down to that low that we set last week, right before the Thursday CPI report. So this is really playing exactly how we expected. We thought the first couple of days of the week were going to be weak. We even thought we could plunge a little bit below that. But on Thursday, we actually think the market's going to be right there around 35.90, right around that point when the CPI report comes out. World indices did not do any better. They look even worse. As you can see, we did find a little support down at those lows, but look, this is still a nasty red candle. There's nothing to be excited about. Last week, we talked about how cryptos were coming to the top of that range. We said, do not be fooled. This is likely just a bear rally. We need to see those moving averages turn up. We need to see the 20 cross above the 50. And you can see that we just hit our head and we came right back down. Cryptos are very, very range bound right now. Not excited about trading them at all. Ultimately, we are at a -3 in the market. This is where we've been. Even though we had that big bounce last week, we said it is most likely a bear rally to be sold into. Sure enough, that is what happened. We're at a -3. We're the most negative we can be on the equity markets right now. If we take a look at the calendar, let's prepare for some things coming up over the next 24 to 48 hours. Tomorrow, we're going to get the claimant count change out of the UK. And then on Wednesday, we're going to get GDP out of the UK. As you can see, UK is in a lot of the news here. Employment report, we hear from Governor Bailey, and we get GDP. Expect the pound to be a little bit more volatile than normal over the next 24 to 48 hours. We have no idea which way it's going to go. We'll take a look at the charts. We'll draw some support and resistance lines. We'll talk about key points, but we just want to be trading pound as it comes, fully knowing that we have a lot of news coming out over the next 24 to 48 hours. After that, then it really shifts to the US. It shifts to US PPI on Wednesday. And then we get the Fed minutes Wednesday afternoon. Those are going to move the market a little bit. But look, we talked about it in the weekend. This week, the CPI on Thursday is going to set the tone for the next couple weeks. If the CPI somehow eases and comes out less than expected, expect the markets to have a fairly sizable bounce. We think equities will have a 3 to 4% rally on that news, and everything will catch a little bit of a bid that got sold off. Not that the market's out of the woods yet. Even if we do get a low CPI, I think the market still has some downside to go, even with a good number. Here is the problem. If this number comes out hot, let's say this number comes out at 0.4, 0.5, New lows. New lows, there's no question about it. And we could see a 5 to 10% sell-off in the markets after a hot print. As you can see, the risk is asymmetric. There's more risk to the downside than there is to the upside. And that's why we've advocated to be more on the short side than the long side, to be looking at buying risk off currencies and selling risk on currencies, because we still think the risk is asymmetric. Now, once we start to really plunge lower, let's say we get a 5 to 10% sell-off from here, all of a sudden, the risk is going to shift to the other side, where maybe there's another 3 to 4% of downside, but we could be looking at a 6 to 8 to 9% bounce on the upside. We will take a look at that when it comes. But for right here, right now, there's no question about it that the risk is to the downside much more than bounces to the upside. Let's take a look at all the currencies. Let's take a look at them on an individual basis and talk about their trends. Over the weekend, this is where we were for our velocity scores. So these were the currencies moving, and these were the strongest currencies moving. We had the dollar as the number one currency going into the week. And the dollar was the best performing currency over the last 24 hours. We had the CAD number 2 and the yen number 3. On the downside, we had the Kiwi as the weakest currency for the week, and we had the Aussie for the second weakest currency along with all of the cryptos. Let's see how they actually did over the past 24 hours. Cryptos were down. We expected them to be down. They were at a -2, and you can see they all lost somewhere between 1.5% to 3%. So kind of right in that range that we expected them to be. We are getting now down closer to the bottom of the recent range. Look, I don't love crypto here. I think we have to have a totally different market environment for cryptos to flourish again, and we're just not in it right now. Any bounce in cryptos is likely to be very short-term in nature. I just don't like them at all for a trade. As far as foreign currencies go, we had the dollar as the best trade over the week, and here we are. The dollar has been the strongest. We had the Kiwi as the number one trade on the short side. As you can see, the Aussie said, hold my beer, I'm going to go down even more. Aussie was the weakest one. I've got to give a shout out to AUDCAD. He actually called the weak Aussie was going to be weaker than the Kiwi over the weekend. Great job. I took a Kiwi dollar short and it paid off nicely. I'm waiting to enter a new trade after that. So as you can see here, we had a very classic risk-off move. Dollar, yen were strong. Aussie, Kiwi were weak. Everything else kind of in the middle. As you can see, the CAD was our second favorite currency, and it performed okay. It performed just so-so. So let's take a look at everything on a chart and update our scores here. First off, let's go over our Kiwi dollar trade we talked about over the weekend. Now look, we had a 2-week low base, and we love when things have a 2-week base because then they gather a lot of strength, and when they break down hard. I think this trade still has some room to go, but on the short term, it looks a little bit sold out. So if you haven't entered this trade yet, wait for a bounce, wait for a low base, wait for something, maybe even wait to the European session. I think this trade still looks good. I'm only going to spend some time going over the chart on Bitcoin for the cryptos, because all the cryptos are doing pretty much the same thing. And you can see we're just range bound. We are range bound here on the cryptos. We're not quite to the bottom of the range. And so I don't like them. I'm not even going to get excited when Bitcoin gets down to 18.5 because, again, cryptos need risk on. They need risk appetite to really flourish. And we're just not in that kind of environment whatsoever. So the cryptos to me are just a no touch on the long side. If you want to go short, I think it's going to be a short-term trade. You're just right above that support line. So trade accordingly. I think the foreign currencies are much, much more attractive here. Let's take a look at the dollar. We talked about this bull flag setting up. So we got this bull flag pattern, big run, this very shallow little downtrend. Once we broke out, we said, hey, it looks really good here. We like long dollar here. And look, we are right at resistance. We expect there to be a little struggle at this resistance level. It's no surprise at all that we are, hitting our head on this level saying, okay, can we go any higher? I fully expect this to consolidate, maybe even pull back a bit, but I do like the dollar on the upside. As you can see here, we've got EMA sloping very strongly higher. We got parabolic SAR sloping strongly higher. RSI up at about 65. everything looks like a green light on dollar. It's just a matter of timing. When do you pull the trigger on a dollar trade? Let's jump over here to the yen, because the yen for the first time in a while actually looks like a buy. So if we take a look here, this is the daily chart. We can see we've been very, very weak in the yen. We hit this low, we came up, and look, we came right down to support, just like we should. And we had a bounce. So our next level here is some resistance right up in this area. I'm not quite ready to jump on the yen bandwagon for long because it has been a short pretty much all year long. But technically speaking, we're starting to make some good ground up if we can break out above this parabolic SAR and we can break out above this resistance line. Again, this is on the yen basket, so we'll take a look at the yen versus some individual currencies here in just a second. But this is starting to look better. I still like dollar best, but yen is starting to show itself that it might want to move a little bit. Let's take a look at Swiss franc, and let's just move on. We talked about how Swiss franc is dead right here. It's just not going anywhere. It is just sitting in a range, not going anywhere. Until that changes, we are not going to try to trade it. We have no idea how long it's just going to sit here. Let's not get frustrated. Let's move on. So let's take a look at the euro. I'm going to start off with the daily chart first. So the euro had a really nice pivot about a month and a half, 2 months ago. And you can see we've been in an uptrend really since August. So we've got this nice uptrend. We hit a new high and we're pulling back, and finding support exactly where we should. We should have found some support somewhere in this area, and we're finding that support. I'm not ready to call this a bounce yet. I'm not ready to say, okay, we found the support and we are now heading to the upside. I'm close. Things are starting to develop. But what I need to see here, I'm on the 4-hour chart. I need to see this EMA start to steepen. I need to see the EMA start to steepen. Right now, it's just flattened. Yes, we did get a signal off the parabolic SAR, but we have no signal whatsoever on RSI as well. I have to say that, euro is starting to show that maybe it wants to have another run off of this bull pullback, but it's not quite there yet. So I do have to upgrade it, but it's not upgraded to where I can really trade it yet. Here we have the pound. We have the same thing here with the pound. We had a bottom we found back in September. We've reached this big high and we've had this pullback. And take a look at where this pullback has come. Exactly where we expected there to be some support. And it's hit here and it's held. That's great, but that doesn't tell us it's going up. All it's told us is it's holding support. It hasn't bounced off support and ripped higher. That hasn't happened yet. And there's nothing in this chart right now that's telling us it's going to happen, because you can see here, we don't have a upward sloping EMA. We don't have a strengthening RSI. We don't have a parabolic SAR trigger. We don't have any of that. So along with the euro, I'm putting the pound in the, hey, it's actually better than it was, but it's not quite ready yet. Maybe later in the week, it will be a great trade. But right now, I just have to upgrade them a little bit to like a +1. CAD has been a pretty decent performer here. But I do want to point out that we are really just kind of in the context of this longer term sideways. I mean, this is going back for a couple weeks. I'm not super excited about the CAD. I need to see some more momentum than this. It's range bound. It just hit the top of its range. It's likely to come down. For me, it's one of the stronger currencies, but it's not at the top of my list. Let's take a look at Aussie. And Aussie has been nothing but weak. Nothing but weak. Let's pull out the daily chart. You can see we've got the momentum really starting to get serious on the Aussie. And it's because we broke through some real key levels. So now we are getting some real velocity. And the big question is, where's the next stop? And we're looking at the Aussie basket. This is the basket of the Aussie against 7 other currencies, equally weighted. Okay, so we would expect to find a little bit of support in this area. Now, Aussie was the weakest currency. I expect the Aussie to have a little bit of a bounce back. And we could easily see a bounce back up to this like 77.60 on the basket. We'll take a look at the Aussie on individual pairs here. I fully expect over the next 12 hours the Aussie to have a little bit of a bounce back. So I like Aussie short, but not here. I want to get a nice rally to sell into, or a low base to sell into. Let's finish off with the Kiwi. Now the Kiwi was my number one. Aussie said, hey, you know what? I want to be a little bit weaker than you. But you can see here, we are at levels. We just have no support here over the last year. If this Kiwi breaks down below this low, which I expect to happen fairly soon here, there's no reason for it to hold up here. I think that the Kiwi over the next 24 to 48 hours has more downside than the Aussie. Where the Aussie was clearly the better trade today, I think the Kiwi is going to be the better trade going forward. So we'll take a look at some of those currency pairs with the Kiwi. So let's upgrade our list here. We have to move the yen up. The yen is starting to show it wants to go higher. I'm okay with going long yen. I like dollar better. But if someone said, Rob, I'd rather go long yen, I can fully support that. I also have to move the euro and the pound up. They're also showing some signs that they might want to go. They've just had like a 2 to 3 day pullback off of new highs. All I need to see is some momentum. I think these trades are still at least 12 to 24 hours away. I'm looking at these maybe Wednesday, Thursday as potential trades if they strengthen. For right now, they're at a +1. They're just on a hold. And then we're going to drop the Aussie down to be weak along with the Kiwi. So it's pretty easy here. Pairing up dollar against Aussie and Kiwi. As I said, I think the Aussie is ripe for a little bounce here. After falling 0.75%, I think it's ripe for a little bit of a bounce here over the next 12 to 24 hours. Well, let's look at some of those trades. We had dollar yen strong, Aussie Kiwi weak, and Canadian dollar at a +2. I already went over Kiwi dollar earlier, so let's just take a look at Kiwi yen. Kiwi yen is going to look fairly similar to Kiwi dollar. But I want to just show you kind of where we've been. This is a daily chart on Kiwi yen. And it, just technically speaking, this thing's really following some nice lines here. If we go down and we say, okay, we are finding some certain levels here. What is our next level? And I think we have to really zoom in here and say, this low base that's forming here, this is a daily chart. We're now looking at 2 weeks. If we break down below this level, and this level is 80.90. So 80.90 on Kiwi yen. Where are we looking for our next level? And the next level is going to be down here at 79.50. That's a nice trade. That is 140 pips on an 80-cent currency. So we're at like 1.7% return. That's a lot of room there on this trade. So I think that is the trade over the next 12, 24 hours. There's not a whole lot else. We'll take a look at one or maybe two other possible crosses. But a break below 80.85 on Kiwi yen, I think you want to be in that trade. And if you're willing to give it a couple days, I think you can get down to this 79.50 area. Again, it's a big trade, 1.7% on this. So whenever we're looking for a big trade, we always like to have a wider stop, and then we'll move down our stop as we start to get some profits and really lock it into a break even at some point. So that's really the only real interesting trade. One other trade you could take a look at. I did like the CAD. It hasn't quite moved yet, but if the CAD does start to move, I think Aussie CAD is an interesting trade here. You can see here, here's the daily chart. We've clearly broken any kind of support here. And now we're just looking at new lows here. Where does it go? You'll have to go back on a chart quite a ways to find anything. The momentum is very strong to the downside on this one. That's one you could possibly look at if you don't want to be trading in dollar or yen pairs, which are going to be highly correlated to the equity market. Let's wrap this up. We've got the equity markets are likely to remain weak. We could get little bounces here and there at any time. These are likely good selling opportunities. We are clearly in a risk-off environment. We have the volatility index, the highest it's been all year. We're seeing the dollar and the yen as the strongest currencies. and we want to be looking to sell Aussie and Kiwi on any sort of bounces. So that is it for the market recap. Everyone, follow proper position sizing. That's how you make it in this business. It's not about being a genius on a chart. It's about being consistent with your risk management. So follow proper position sizing rules. Thanks for joining me. Take care.